What's up, you guys? It's Ben and welcome to my channel where we talk about everything there is relating to selling on Amazon. So if you're interested in that sort of stuff, consider subscribing. A few days ago, I got a lovely email from my accountants. Now, most of the emails from my accountants are relatively positive. However, this one really annoyed me. And the reason why is because it was an email stating that I have to pay HMRC almost £5,000 in corporation tax by the end of March next year. So it got me thinking, and it got me to give my accountants a call to try and find out of ways of how could I possibly reduce my corporation tax bill as much as possible so I don't have to pay that much money next year, because as my revenues are growing, so are my profits. So what can I possibly do to reduce those profits and therefore pay less in tax? Now, before I get into this video, there's a few things that I have to mention. Number one, I'm not an accounting professional. I haven't got an accounting degree, and you should not take my advice as gospel, so to speak. I'm just a random YouTuber that is giving you my points of view. Somebody that has been selling on Amazon for over 2.5 years. I've done my research around this topic. However, it is something that you should look into further. Secondly, the reason for this video is basically just to give you some ideas, something for you to potentially speak to your accountants about, because everybody's situation is different. My finances, my situation, my business is going to be different to every single one of yours. And lastly, and most importantly, this video is for you guys that are already selling on Amazon. If you're just starting off or you're still in the product research phase, then it's probably not going to be right for you, because worrying about taxes comes way later. In the very beginning, what you need to focus on your efforts about is all about making that money from Amazon, starting your business, product researching, speaking to suppliers, and getting your product listed. Okay, once that's out the way and once you've got a few products selling, then you can start thinking about your company taxes and so on. So with that being said, let's get started. First things first, what you have to understand, guys, is that you and your business are completely separate entities. A lot of people actually get this mixed up, but when you create your own limited company, you have your own taxes, and then your business has their own taxes, okay? You as a director, who is basically the leader of the company, have got two taxes to pay, and that is income tax on your salary effectively, and national insurance tax. Those two taxes are for you. Now, your business, on the other hand, has also two taxes. The first one is value added tax. This comes in once you have reached £85,000 in revenue, so effectively you don't have to worry about it just yet. And secondly, it's corporation tax, and that is basically a tax that is paid on your profits. On your profits at the very end of the year, what's left over at the bottom line, you pay a 20% tax on those profits. And the goal here is for us to do two things. Number one is to reduce your corporation tax, income tax, and all the NI bills as well. Okay, so we want to reduce the bills that you as a director will pay to HMRC, and we want to reduce the bills that your company is going to pay. Now, VAT is really difficult to reduce because it's literally an automatic 20% tax on your revenues, but the other three taxes we can do something about. We can maneuver our finances in a certain way to reduce those tax bills, because at the end of the day, the more money you pay to HMRC, in my view, the more money you can just give away effectively. You might as well give that money away to charity, okay? So we want to reduce those tax bills as much as possible. And also what we want to do is we want to find out a way how we, the director, can take as much money out as possible out of our business. So transfer money from one entity, from your business, to your own personal account without paying any tax. So that's what we're going to cover today. So first things first is think about paying yourself, okay? Now, what do I mean by that? Is basically you, the business is going to pay you, the director, a salary of £792 per month. Now, why did I choose that number? It's very simple, because that is the maximum threshold each and every single month, according to the UK law at the moment, that you can get a salary without paying a penny in national insurance and income tax. That is the absolute max amount of money that your business can pay you with no costs at all. Okay, so every single month you want to pay that money. Now, if your business is just starting off and you actually don't want to take a salary out just yet, that's absolutely fine, as long as you have it written on your books that you are an employee of your business and you're taking £792 out each and every single month, because that money doesn't have to be paid every single month. You can just accrue that owned income, that when you do want to eventually pay yourself out, you have quite a big chunk of money that you can pay yourself going forward. Now, next up is that basically when you pay £792 to your employee, effectively the business is paying the director, you are also reducing the profit of that business by £792 each and every single month. And because you are reducing your business's profit, you will be also reducing corporation tax, because effectively you as a director are your business's employee. And employees is the biggest cost to each and every single business. And when you take that £792 out of the business each and every single month, you will have a lower profit. Okay? Next up, paying yourself as a dividend. Okay, now every single year, if your business is profitable, you as a director is eligible to £2,000 a year in dividends, completely tax-free. Okay, so each and every single business that's profitable is eligible to pay their employees or directors or whomever dividends. Okay, whoever has an ownership stake in the company can get dividends. Now, this is only possible, guys, if your business is making a profit. So if your business for the first tax year is not making any profit and has actually incurred more losses than profits, which is exactly what happened to me, then you are unable to pay yourself as a dividend. Okay, but if you are in profit, which now I currently am because I'm paying corporation tax, I am able to take money out tax-free to the first £2,000, but then I'm also able to take out more than £2,000 at a 7.5% tax rate, okay, which is actually, guys, significantly lower than if I was taking money out as a salary. So ideally what you want to do is you want to use up as much of tax-free money first, and then the best way to pay yourself afterwards would be as a dividend income past a certain level as well. Remember that. Next up is expensing absolutely everything you can, okay? If you are paying for your petrol bills, if you are paying for restaurant bills, if you're going on a potentially holiday, if you're traveling or whatever, make sure that it is counted as a business expense, okay? Whatever you can possibly, and you need to speak to your accountant about this, but whatever you can possibly get through your business as an expense, do it, okay? Because it's really simple. The more expenses your business has, the lower the profit is going to be. And the lower the profit is going to be, the lower the corporation tax is going to be. Furthermore, once you have reached your £85,000 in revenue, and you're now VAT registered, you can claim back VAT on each and every single one of these purchases. So let's say, for example, you're filling up your car with petrol, you will actually see on the receipt the actual payment and then VAT on top of that. Well, every quarter you can claim that VAT back because it's a business expense, and therefore the VAT you pay, it takes away the VAT that you have already paid and therefore reduces your VAT bill. So you reduce your corporation tax by including all of those expenses, and you also claim some VAT back by getting those VAT payments back as well. Next up, providing a loan to your business. Now, what do I mean by that, guys? So basically, when you're starting off a business, ideally what you want to do is you want to keep as much money from that business as possible. Let's say you put in a £5,000 into the business, you don't want to start paying from that £5,000 for petrol and restaurants for staff entertainment and so on and so forth. What you want to do ideally is pay for everything from your own card, okay? And then the business will repay you. It will owe you money. Now, what do I mean by that? Say, for example, the business, say, wants to buy a £1,000 basically valued laptop, okay? The business, you will pay for that laptop from the business account, okay? So the business will be £1,000 down, and then you as a director will loan the business £1,000. So effectively, the business bank account went from £5 grand to £4 grand, but then you, the director, paid the grant back into the business. Well, what you effectively did there is two things. Number one, the business is paid for the laptop, so it's down on profit by £1,000, and then you as a director paid the business, i.e. loaned the business £1,000. So the business still has £5,000, but now it has lower corporation tax because it's got £1,000 worth of expenses, and it has a loan repayment back to the director because the director loaned him the money. And the loan repayment can be paid back at any point. Okay, which is beautiful. And this is exactly how I'm paying myself for this year completely. I am paying each and every single month myself and my girlfriend as a loan repayment, because over the last 2 years we have paid a lot of business expenses from our own personal account, which is great. All of that money now can be taken as tax-free whenever we want, and it's actually collated up to over £20,000. Okay. And then last but not least, let's say you've done all of these things. Let's say you've paid yourself. Let's say you've taken out some dividends. Let's say you've loaned the business as much money as possible. You've also basically expensed absolutely everything, and you still have profit at the end of the year. What you can do is actually put some of that money away for your pension. So let's say before the end of the year, you speak to your accountant, and your accountant says we're still in net profit for about £15,000. Well, what you can do is set up an employer pension, and you can put that £15,000 into a pension. That pension current allowance is up to £40,000. Now, what's better, to pay yourself later, effectively in a pension, you're not going to get that money here now straight away, or pay the HMRC? In my perspective, it is paying the pension. And that's the mistake that I didn't do. If I was to pay my pension this year, I would have not had to pay any corporation tax at all. Okay, and there is no tax on that pension. So whatever money you put in towards your pension, which, like I said, is up to £40,000, is completely tax-free. Furthermore, by putting money into your pension, you are reducing your profits and therefore eliminating or reducing your corporation tax bill completely. Now, also what you can do, so let's say the first year, like me, you forgot to pay for your pension. What you can do is actually carry forward up to 3 years and pay yourself more. So last year, because I didn't put any money into my pension, this year I can actually pay £80,000 into my pension pot. So my allowance is actually doubled. And if I didn't pay any pension to my pension the year before that, I can triple it as well. So basically what I'm trying to say is that now that I've done my research, now that I've spoken to my accountant, now I understand how taxes work, I will not be planning to pay corporation tax anytime soon, because any profits that I have left before the end of the year, I will just be paying into my pension as quickly as possible, and therefore keeping my business at a break even or at a net loss. Or I may pay a little bit less, so I have a little bit of a profit to show, so therefore I can take as much dividend money out as possible. So remember guys, when it comes to running your business, in a few years or so, you will have to understand these things. You will have to know how the UK taxes work to make sure that you can keep as much money in as possible at the business, or take out as much money as possible out from your business to your own bank account without paying any corporation tax whatsoever. Now, I know this guy's video has been quite a lot to take in. Please pause, review, rewind back and look over it again. This is something that's quite hard for me to get my head around, let alone you guys to get your head around. If you do have any questions, please don't forget to comment down below, and we'll speak to you soon. Bye bye.